Attention business owners. Do you qualify for safe harbor expensing? For 2024, you can elect the de minimis safe harbor to expense assets costing $2,500 or less $5,000 with audited financial statements or similar. The term safe harbor means that the IRS will accept your expensing of the qualified assets if you properly abided by the safe harbor rules. Here are 3 benefits of this safe harbor. 1. Safe harbor expensing is superior to Section 179 expensing and depreciation because you don't have the recapture period. That can complicate your taxes too. Safe harbor expensing simplifies your tax and business records because you don't have the assets cluttering your books. 3. The safe harbor does not reduce your overall ceiling on Section 179 expensing. Here's how the safe harbor works. Say you are a small business that elects the $2,500 ceiling for safe harbor expensing, and you buy 2 desks costing $2,100 each. On the invoice you see the quantity 2 and the total cost of $4,200 plus sales tax of $378 and a $200 delivery and setup charge for a total of $4,778. Before this safe harbor you would have capitalized each desk at $2,389. $4,778 divided by 2 and then either Section 179 expensed or depreciated it. You would have kept the desks in your depreciation schedules until you disposed of them. With the safe harbor you expense the desks as office supplies. Your tax records life is easier. You and I do a 2-step process to benefit from the safe harbor. It works like this. Step 1. For safe harbor protection, you must have in place an accounting policy at the beginning of the tax year that requires expensing an amount of your choosing up to the $2,500 or $5,000 limit. I can help you with this. Step 2. When I prepare your tax return, I make the election on your tax return for you to use safe harbor expensing. I do this with an election statement on your federal tax return and file that tax return by the due date including extensions. If you want to use this safe harbor in 2024, message me. Set this up so that it is in place on January 1st.